Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, October 4th at about 1:30 p.m. Eastern. Well, today, Chicago Federal Reserve President Austin Goolsbee called the latest U.S. jobs report superb and said more labor market data along those lines would boost his confidence that the economy is at full employment with low inflation. Wow. This came after the Labor Department released its employment report for September, which showed a considerably bigger than expected gain of 254,000 jobs and a drop in the unemployment rate to 4.1%. So we'll take it. We'll take it. And now let's go on to three charts that could give us some insight into the week to come. As we always do, we're first going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, as you can see right here, the SPY was trading at $571.35, or about 57.13 on the S&P 500 itself. It's still basically in consolidation mode that it was in last week when we spoke, just a little bit above the 20-day moving average, kind of trading sideways here, dropping down a little bit, going back up. And it is trading just a few points, just a couple points below the all-time closing high, which is kind of hard to see. It was actually back this past Monday on September 30th at $573.76. So we're right there. We're $2 away, no big deal. Now, we know that after making July, back here, we know that after making July's all-time closing high at that time, and that was at $564.86 back here, we know that the SPY rolled over. It dropped dramatically. It dropped down, actually down here to its August 5th open. And I don't know how many times in the last 20, 25 years I've said August lows. It seemed like we always have August lows. Anyway, it rolled over and dropped dramatically to its August 5th open down here at $511.64. And that was quite a rude awakening. From there in the following weeks, fortunately, the SPY rebounded nicely. It went back up above the red line, the 20-day moving average, the green line, the 50-day moving average. And it bounced back up here to August, traded in a range at 555 to 564, near, sort of near July's all-time high. Then on September 3rd, down here, rolled over again. Dipped below the 20 and 50 days, but only for a couple of days, 3 days, then bounced higher, back above the 50-day, back above the 20-day, and again moved up to these new highs, this new closing high, and then fell down a little bit again to where we are right now at 571.35. So we have, if we look here, we see it is still above the 20-day moving average, which is coming in now at $565.12. We can call it 565. Also above the 50-day at 554. And if we look a little lower here, we can see the black line, the 200-day moving average, is coming in at 524. Of course, we always want the SPY, if possible, to stay above this line. Now, what we can do here, if you're probably looking as I was, like this, we can draw a trend line, which if I can keep drawing a straight line, that worked. So we see a trend line coming up to about where we are now, that it would be nice to stay above. We can draw from the top of this line, if I can do it again. No, I can't do it that well. Back up over to these highs. But what you see here is a great big triangle. So what we want, of course, in this case, as we move into third quarter earnings season with the banks this week, we, of course, want, if you're bullish, you want the SPY to break out and above these highs here. And we will see if that can happen. Their potential resistance here is, call it 574, 575 right here. That would be good if we get a breakout. Now again, we do have support here at the 20-day moving average at 565, at the 50-day moving average at down here at 554. We have the August low here. This particular August low we have at $510. And of course, we want it to stay above the 200-day moving average at 525. But basically, what we always like is for what we're looking at, if we're bullish, to stay above the 50-day moving average. Again, that's coming in at 554. So you can just keep that at your elbow to kind of keep an eye on that. Again, in this coming week, the banks will start third quarter earnings season by announcing their earnings. And third quarter earnings season is usually an exciting time, so stay tuned. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. We usually call it the cubes. Sometimes I call it the Qs. This follows the NASDAQ 100, the top 100 non-financial stocks in the NASDAQ stock market. NASDAQ 100 is home to the big momentum stocks like NVIDIA, Meta, Apple, Microsoft, Tesla, that whole group. Now, when I captured this chart today, the cubes were trading at $485.89. That's, of course, nicely above, just above the 20-day moving, coming in at about $478.17. Just call it 478. Make life simple. And above its 50-day moving average at $469.26. This is just close, but just about 4% below its recent all-time high, and that July held on the cubes. That was on July 10th at $502.96. So that July high, as closing high, has remained king at that one. So after making that July 10th all-time high, the cubes rolled over and they dove dramatically. I mean, this came down fast. Tried to bounce back up once below the 50-day moving average, couldn't handle it, gapped down on August 2nd, it gapped down really steep here, then gapped down on August 5th to open at $424.71, actually intraday dipping below the 200-day moving average. But it rebounded in the following 3 weeks. The cubes moved up again under and over the 20-day moving average, up and over the 50-day moving average, actually made an August high here at $485.54. So there you go. Then it rolled over again. The cubes is always more volatile than the SPY because of all the tech stocks in it. Rolled over here, made an August high, as I said, at 485.54, rolled over down here to 448, stayed above the 200-day, that's a good thing, then rallied back up, back above the 50-day, back above the 20-day, came up here to, so far, September highs. Recently, and that was at $493.70. So that was quite a move here, still below the July highs, but giving it a shot. Moved back here, back down to the 20-day moving average this past week, and then again down to where we are now, just atop the 20-day at 485.89. So if we drew a trend line here, we can connect these lows. I don't like that. Okay. I should have done this ahead of time, right? So if we connect these pivot lows here and extend it, we find that the trend line's coming up to right about where the 20-day moving average is. We can do a couple of trend lines here. I don't want to get it so crowded we can't see the chart. But we can draw that. We can draw another trend line here. But what we're getting here also, again, is another triangle. And we know that with triangles, at some point, and it's coming together, price tends to break out or break down. So we'll fingers crossed, we'll hope for the breakup, although hope is not a strategy, that's for sure. The Qs have support here at the moving averages. Again, the 20-day moving average at 478. The 50-day moving average at 479. We can go down here to the September low. We've got 448, 449 for the 200-day moving average. And then we can actually look down here at 424, although I hope we don't have to use it as that low there. So again, we're heading into third quarter earnings season and into the fourth quarter. But of course, with a new earnings season, that can be very exciting, especially for tech stocks. And we do want, the bulls will want the Qs to stay above $469. That's always a bullish thing when what your asset you're looking at can stay above the 50-day moving average. So stay tuned and keep an eye on that. Our final chart today is a daily chart of the Global X Cloud Computing ETF. We've traded this before some time ago. Cloud Computing ETF, symbol CLOU. We'll just call it the CLOU, I guess. It has 35 holdings, including the top holdings include Wix, Box.com, Zscaler, Zoom Video, we're all familiar with that, and Digital Realty Trust. Now, we know that, let me think here. I was thinking of the all-time highs it made, and I looked it up, and I'm trying to remember what I saw. Okay, we know that it made, and I think it was 20. I got the, you know what? I've got the years wrong here, so you're going to have to forgive me for a minute. I know that in prior years, and I didn't write it down, so please forgive me. It made a high of, the cloud made a high, I think it was in 2020, it made a high of $32.37. So I just wanted that number. Then it headed lower. It headed lower down to the $14 to $18 range. That was in the last couple of years, and I mistakenly didn't write down the years, but in the last couple of years, I always look at a long-term chart before I go into these things. So we know it had a high in the last couple of years of $32.37. I know it moved down to lows. After that, a pretty dramatic drop down to $14 to the $14 to $18 range. Now, if we look on our screens, and it did move down dramatically from there. Now, as we look on our screen on our daily chart today in March of this year, we know that it made highs at right around $22 here. So we'll start with the daily chart we have here, and please forgive me for messing up those years, but anyway, the numbers are in our head. The all-time high was 32.37. So now on our screen, we can see that the CLOU made March highs at 22 and then gradually moved lower, down below its 50 and 20-day moving averages, down in a downtrend, down to about 1870 here in June, then rallied back up, couldn't get above its 200-day moving average, then gradually moved down, and like everybody else, made an August low here at $17.79. So it did that, then it rallied back up above the 20-day and the 50-day to about 20, and then consolidated again, and then fell to make the September pivot right here, then rallied to where it is now, rallied back up to the 200-day, couldn't get over it, and where it is now at $20.47. But what I want you to see here is a potential inverse head and shoulders. So we can look at this here. Inverse head and shoulders, of course, is a head and shoulders standing on its head. Call it upside down. So what could be here, it hasn't been confirmed yet, but what could be is an inverse head and shoulders, which of course is a bullish pattern. So we see that right now, this inverse head and shoulders, the 200-day moving average, the black line here, is coming in at $20.71. It's kind of drawing a neckline for us. And we know with a head and shoulders or inverse head and shoulders that once it makes this pattern, then once it breaks, in the case of an inverse, above the neckline, and I'm going to draw the neckline right about where the 200-day is, maybe just a teeny bit low, well, pretty much right there. So if it breaks above this neckline on the inverse head and shoulders, that would be a bullish move. So what I'm thinking is of this. In the coming week, if the CLOU, if the cloud can stay above its 20 and 50-day moving average, again, the 20 is coming in at $20. The 50-day is coming in at 1971 down here, the green line. If it can stay above its 20-day and 50-day moving average, and what I want it to do here is I want it to climb above its 200-day moving average. 200 days coming in at $20.71. If it can do that and stay above it for 3 consecutive days, I will add a small position of the CLOU, the cloud, to my trading portfolio. I'm going to put a stop below the 50-day moving average down here at $19.25, okay? If and when the CLOU, look left with me, those March highs back here, if and when the CLOU can move above 22, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the CLOU in the coming week. And now, check out this news from ToniTurner.com. We've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless trading programs. How to bottom fish like a pro, and we're talking about this one right here, which, as you know, is one of my favorites. How to bottom fish like a pro shows you how to find low-price stocks that are poised and ready for their next breakout. It shows you how to buy low and sell high and take maximum gains from long-term trades. And I like that. You don't have to sit and stare at it all day. You just have everything in place. With this strategy, importantly, you'll know when to buy, how to easily manage your position, and know exactly when to take profits. Now, our new discounted price for this program is only $199. You should make that back on your first trade. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. And now these are the charts I use in our sessions here. From our ever-popular 7 Steps to Successful Trading, our flagship program, to How to Swing Trade Successfully, another one of my favorites, Trade the Trend to Profits, How to Read Charts, great for novice traders, 3 Winning Setups, great for short-term traders. Find out how these timeless online programs can help you earn more money quickly and easily. And once you purchase, you have unlimited access to learn at your own pace. So please be sure to check them out by going to the link on this screen up here, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.